Hey guys, it's Will here. I wanted to talk about the markets and maybe a few other things. So today is July 30th, 2020. So what I've got here in TC 2000, I've got a few sections which are different stocks or ETFs or whatever. So I've got down here, so you can have like tabs in each section. So you can see up here I've got like 3 basic blocks, but then they have tabs so that you can put more stuff on there. And then you've got this scroll bar. So down here I've got markets. And so here I look at the overall market, and these are kind of the default columns here. So let's take a look at the Dow Jones. We're down at 1.27%, and you can see I've got a line kind of, at the trend, uptrend here. So we're generally in an uptrend, and then today we've kind of broken through that. But we're very close to the 50 and the 200 moving average are kind of close together. So you can see here with this little tail that we kind of bounced off the 50 today. And so we'll have to see if this supports at the 50 or if it's going to break down. Another negative aspect, we had this island reversal I talked about before, where the gap's up, there's some candles, and then it gaps back down. And you can see at the bottom of this section here, right at the bottom of the candles for the island reversal, it never really got above that. So we have a higher low here, or a lower high from here down to here, which could be a bad sign. On the as I mentioned, that you're still above the 50 in an uptrend essentially. And the other positive thing is that the 50 is about to cross the 200. So, that can be a good sign. So, but in the last week or so, you can see obviously there's been this downtrend. So sometimes what I do, or quite a few times, is I draw a line on the current trend, and then when it crosses it like this, I would draw on the tops for a downtrend. And so you can see, even though it starts to come up right here, you wait and see, and then of course you bounce down again, you hit off of this trend line, or the 200 moving average as well. I didn't quite get above that. And then now you're looking, okay, here we've broken above, so there's a chance that now we're in this uptrend, at least in a shorter term, like you can see down here, that there's a longer term uptrend. But if you're waiting to trade, get back in, you see this downtrend, you want to get above this EMA. This is kind of the line I use for decision making. I want to see it above that. That's not the only criteria, but and also what will happen is if you get above this and you see that there's a 200, it'll probably bounce off that. So you see exactly that's what happened. And then it bounced off this gap here. So and then now we've sort of potentially had support at the 50. So these lines do work. People are watching them. So, even if it's a self-fulfilling prophecy, it's definitely something to keep an eye on to see what's going to happen. So in summary, we have to kind of watch, but we're in a bit of a danger zone here. And also there's a lot of earnings coming out, and GDP was down and stuff. So I was late July, early August, there's a lot of earnings. And, even though people are anticipating bad situations, it can trigger some, negative reactions, even if it's been anticipated. And so if we go to the S&P 500, it's a bit of a different situation. We have reached a new high up here, and we're above the 50 and the 200. So because, there's a lot more tech and stuff in here as well. So whereas the Dow is an industrial, the Dow is kind of like a lot of the recovery stocks, transportation and stuff like that. So from a specific situation, we're below this 8 EMA now, in a high sideways sort of movement. So, it's another wait and see. There's no definitive issue here as much as with the Dow. And then we have the Russell 2000, a lower high here, but we are above the 50 and the 200, and it's kind of supported at the 200. and these are small caps. So there was a sense that things were moving like into the small caps because they've been hit pretty hard. So it looks like, you know, it's a chance that those are going to start to come back. The nice thing with TC2000 is if you click on this component watch list, and you can see that part of the reason was Kodak is in there, and that went up huge. Tupperware yesterday was up huge. So there are other things in here as well. There's you know, overstock and cars, like a lot of automobile sales, used trucks and cars and stuff like that, like online ordering of vehicles. So anyways, IWM, I'm just going to go back to that one. It's in a bit of a flat section here. It's still in half decent shape and an uptrend and above the 50 and the 200. So it's not looking too bad. And then the Nasdaq had some trouble here. We kind of topped out here and we're coming down for the last week or so, but it's still kind of in an uptrend here, technically speaking, and above the 50 and the 200. And, you know, it is below this 8 EMA here. So in terms of if you're going to get in at that point, just on the Nasdaq, it wouldn't be exactly the time to get in right here. So that's mostly what I wanted to say about the indices. Even if, like, when the market's in this situation, nothing really horrible is happening so far, and so there are stocks that can be purchased if they look decent. I've got another section right here, which is just how I do things. It's the various sectors. So you can see DOG, RWM, SHP, SQ. These are the inverse ETFs. So if you wanted to get in, if you think the market at some point is going to be going down, you know, you can get these. You can buy these inverse instead of shorting stocks. There's a home builder one, ITB, was starting to look pretty good. You can see here again, it's kind of flat, but it's you know, these are sectors. So in this market, it kind of makes sense a lot of times to look at sectors. And then if you want to get utilities, of course, you see what happens here, how it hits off the 200. But utilities have shown a bit of life in the last you know, couple of weeks. Since I mentioned NAT and shipping stocks, let's just go to NAT. So there's a potential for this to start to do well. You can see how it's starting to come up here, but of course the 50 moving average is here, so it kind of squeezes in there. It gets kind of squeezed in there, but once it gets above that, it has a potential to do really well. So that's something to watch. And if you click on this watch list here, you can see related stocks, which is nice. And for this eagle is looking pretty good. So you can see I drew like it's not a perfect science, but you draw kind of a downtrend here. And once you break it, of course, you'd like to see higher lows, but you've broken up above the 50 here. The other thing to consider, and it's a nice feature of TC2000, is the earnings date. So I always put that on here. I don't like to trade. A lot of people, you know, they're kind of gambling mentality and they think that there's going to be good earnings or whatever, but I generally try to avoid owning stocks, especially right at earnings. So even though you could lose out on, you know, a huge gain or something, but it's just too risky for me. I've seen even on good earnings stocks go down. So this is a nice feature, is to put the earnings date on the chart. And so a strategy could be like buying before earnings, and then once it gets to earnings, you could sell. So it's kind of like buy the rumor, sell the news. If you start to see it coming up before earnings, that could be a strategy where you don't necessarily hold it through earnings, but you get out just prior to the earnings, because people are anticipating something, and you know, you could sort of play that maybe 2 or so weeks before the earnings date. So if you want to pick up TC2000, I got the gold. I didn't mention this before, but I've got the gold edition. You can get a free trial and $25 off your purchase, but Gold is, it gives you enough features. There's silver and then there's platinum, I believe. But most people who have signed up have gold. And, I also get US data in real time so that, I don't have to wait that 15-minute delay, because that's kind of annoying at times. But depending on how long you're trading, if you're doing long trades, longer term trades, you don't really need real-time data. I may get rid of that at some point, but it was kind of frustrating when the market opens and you're not knowing really what's going on for 15 minutes. But that's another add-on to the charting situation. But earnings date is nice to have on there. What was the other one? Sting, Scorpio tankers. This has a good potential, because this is called a fry pan bottom or rounded bottom breakout. It's pretty flat. You can see all the red dots of volatility. Now you have a couple of green dots, and we're above the 80 MA and it's starting to move up here. But like I said, earnings is August 6th. And the other issue is the 50 moving average. You can see how it hits here and comes back down. So if you're buying as it comes up above the 80 MA here, the black line, you know that you only have this distance here, 6-7%. If you're happy with that, you can still, that's a one-day gain, but then you might want to get out as it gets close to the 50 just to see what happens. And then we came way down. We're in this flat consolidation phase. So something you can do, there's these drawing tools with TC2000. And if you hold the shift down, you end up getting this, see now it's a horizontal line. So when I see a flat area like this, I can put the line somewhere here like this. And then you can right click on that line and say, set an alert. And it'll alert you when the price crosses that. And you can decide if you want to get that, if you want to buy that or not. If you look at this candle, this was about a 5% gain. So that's not a huge, it's a fairly substantial amount in one day. So sometimes you'll see a sell the next day, even if things are still looking good, because it's just people profit taking or whatever. So it went up 5% and then they sell back down. But you're kind of looking at to see that this is going in an uptrend. So it's a bit early in a lot of cases, in some cases, depending on your risk tolerance and where you're kind of, what you're thinking about doing. But it's just the early start of a transition. You can see all these red dots. These are the volatility stops. And once you get to the green, that means that it's a good indicator. A lot of times it's a good time to buy. It's quite a good indicator. And it's kind of meant to put your stop at this point to avoid the volatility and getting stopped out. But it also switches. I mean, you get fake outs here like this one, but you knew that, you have to look at other things too. But a lot of times if we scroll back, you see here these red dots, and then this went green, and that was a pretty good little run there. And then you get the red dots, and then when it switched to green, that was a good run. So the switch between green and red it doesn't work 100%. Obviously, you look at other factors, but it's actually not a bad indicator, just in terms of when you might want to get in on a trade somewhere in that range. All right, that's all I wanted to say for today, and we'll talk to you next time.